Hi, this is Drew Tignanelli. This is our November update. So we've had an interesting month and a half, 2 months. We've made some changes.
We have, and volatility's picked up in the market. The news flow seems to have picked up. Everybody's back from all their vacations.
We also shifted some of our portfolio to more tax efficiency. Because our taxable portfolios have always ran side by side our taxable portfolios, and we've been thinking about, if we could make these portfolios more tax efficient, we'd give those taxable clients a bit of a boost. And the municipal bond market gave us a great opportunity to do that recently.
Yeah, for sure. I mean, in the dislocation in the market, we said, this is a great time to make that break and have kind of a tax-sensitive set of portfolios as well as a tax, insensitive or taxable, tax-exempt portfolios. So we made those moves, and I think that'll help clients going forward because what we look at with client portfolios is not just a gross return. We look at everything, net of fees, net of taxes, net of everything. What are people able to take home at the end of the day?
Right. And the other thing, too, that we did is we minimized dollar risk. What do we mean by that? We mean that any currency that's traded in another foreign currency against the dollar, if the dollar appreciates against that currency, that portfolio will actually shrink in value even if the underlying assets went up less than what the dollar went down. And I think we're headed into a period where the U.S. is getting closer to raising interest rates in the rest of the world, as today actually. Right. Japan is just coming out with even more quantitative easing. Right. Europe is talking about trying to pump up their quantitative easing. Right. They're specifically trying to drive their their currencies lower. That's a terrible risk for those portfolios to have too much dollar risk. Now, just because currencies are going lower, that doesn't mean you should abandon your foreign currency. It just means that you've got to make sure that it's more limited, and that's what we did when we shifted that portfolio.
Yeah, we made some of those adjustments. Because coming into the year, we had a larger than normal, perhaps, international exposure with the expectation that there were some opportunities there.
The valuations were great.
Valuations are very attractive, and they've gotten more attractive on a relative basis, especially because you look at our S&P 500 markets up about 8 or 9%. The international markets as a group are still negative.
Negative to flat at the best, and the small caps in the U.S. are flat. What you're seeing, Tom, is you're seeing a much shallower up move in markets. Right. Even though you see these dramatic moves, and they, like today, Japan up 5%. Right. Well, that means that to Japan, that means they just finally got positive after 10 months of the year. Yep. And so people are seeing and hearing the S&P 500 is hitting a new high. Well, that's after it's bounced back and forth from a loss to a positive to a loss to a positive. Right. 3 times this year it's done this.
Yeah, volatility's increased, which is usually a good thing for the markets to have a little bit of volatility, that there's not just complacency in the market, but we have seen the volatility pick up.
Yeah, and in addition, you're getting a much shallower up move. It seems to be isolated to the biggest stocks, and when that starts to happen, that means that you're getting tired. The market doesn't seem to have as much oomph when it gets those big 1 or 1.5% up moves. You normally see all stocks going with it. You're not seeing that currently. You're seeing only a certain subsector of those stocks going higher. The manipulation by central banks and governments has been so intense over the last 5 years that this is not going to end pretty. That's all I can say about it. But it could go on for another year or two. And what we have to try to figure out is how can we dance into it a little, wade into it a little, I guess is a better way to say it. Wade into it a little, but yet at the same time, be clearly able to move if we have to.
Yep.
I don't know, it's getting more complicated, it seems like.
It has. And, one of the things we've been talking about with clients is making sure they understand, as we've invested their portfolios, what the options are and what approach we've taken. We run portfolios and our balanced portfolios that are balanced. So they are well diversified, and they have stocks, they have bonds, and in some cases they may have some commodities or other alternative exposures. And so they're going to be more moderate. We're trying to preserve, capital for clients and have a good rate and growth and return. We're not going to chase these markets that are going one way or the other, and we want to be diversified because we know that the market that's been great this year is usually the one that doesn't do as well in a subsequent year. You don't see that it's always the best market, so we're trying to be diversified. So we have balanced portfolios for clients on our active and on our index-oriented side.
Yeah, and that's an interesting point that a lot of our clients may not realize is that we have index portfolios for those that like that passive, whatever the markets are doing, I'm fine with that. If they go down 20, 30%, I'm fine with that. If they go up 20 or 30, I want to go up with it, Right. So we have that index portfolio. We have active portfolios. We have bond portfolios. So we can pretty much address any need, and we have supervision where the client wants to dictate their own investments. So we're designed to meet any client's needs. Now, that brings up an interesting topic that something that we've heard 3 or 4 times over the last 3 or 4 years that obviously we haven't communicated a very good message on. And that is that somebody called us up about 3 weeks ago and said, "You never call me. When things you don't call me and tell me what's happening."
Right.
Well, it's our company philosophy not to call our clients proactively, but to send out these videos and send out emails and to communicate through more subtle ways and say to the client, if you need something, call us. We're here. Like a doctor, our company is fashioned after the medical profession. My doctor does not call me to see if I'm feeling okay.
Right.
My doctor waits for me to call him to say, I want to do a physical. I'm not feeling well. Hey, something's going on. And then he instantly is available for me.
Right.
That's the way our company operates. And we need to make sure that our clients know, call us, write to us. We'll be immediately available to you, but we are not going to be calling clients like the securities industry does, because that's done as a form of, I want you to know I care about you. Well, if somebody's doing it because they want somebody to know that they care about them, then it's being done in a not necessarily for the right reasons. In other words, they're just trying to make a client perceive something that really isn't actually happening. And in our firm, we're spending our time thinking about investments and dealing with the clients that call us up and say, I've got a problem.
Right.
And we're here to help them. Any of our clients, anytime they call us, we will be in touch with them immediately as they perceive that they need help or they need some discussion about their 401k or about what's going on with us. We send out reminders to do personal financial reviews. Some clients are once a year, some clients are twice a year. If the client doesn't respond to that, we might give them a call to say, we'd really like you to come in to do this personal financial review, but we're not going to push. We're not going to insist that they do it. We're going to make it that the client needs to be proactive with us and say, oh yes, I want to do that. And I'd strongly encourage everyone to do a personal financial review.
Yeah, and recognizing that we have technology that makes it even more personal. We use GoToMeeting as an option.
If a client wants to just stay at home?
Yeah, if they can't make it in here, and that's fine. We're happy to do GoToMeeting. We can even maybe put a camera if we don't want to scare them too much. But and we can communicate with a GoToMeeting. We can put their portfolio onto the screen. There's a variety of things we can do to make that as interactive as possible. I love when people come in. It's great to have that across the table interaction.
I've called many a client on the way home if I wasn't able to get them during the day. Because if client calls, we're going to be available to them.
Yep, exactly. Yep.
So anyway, just wanted to remind our clients that just last month we brought in Bob Boner, CPA, up in the Gettysburg office. He and his 6-7 people will be joining our firm so that we continue our emphasis on tax and accounting, which is a great synergy with financial planning. And, I think the relationship is already proven to be incredibly beneficial to both of us. So I want to remind clients of that. And also, we're going to try to be a little more interactive with our clients this year coming up, because there are a lot of issues happening. And we think that there is, that the next 2 years could prove to be very interesting.
Yeah. For us, the markets, and our clients.
For us, the markets and our clients, and our job is to navigate through them. So this is the close of our November update. This is Drew Tignanelli saying God bless.